Right now, the bond market is telling us that we're headed into a recession. That's what it means when the yield on the benchmark 10-year Treasury drops below 1.9%. It's a real warning. But is the bond market right? That's the big question. The answer is complicated. Like I told you at the top of the show, you need to accept that trade war is going to keep escalating, which will really hurt the Chinese economy and do plenty of collateral damage over here. However, that doesn't mean you need to sell everything. And when the dust settles, I think you'll be able to buy the stocks of companies that really won't be hurt by the new tariffs at great discounts. So let me give you some specifics. When Wall Street finishes adjusting to the new normal, meaning after a decent pullback, what should you buy? First, there's tech, or at least non-cell phone related tech, the kind of tech companies that keep making the numbers even when the economy slows down. And that's why even into this sell-off, I like Alphabet. I like Facebook. I could even endorse Netflix here because they don't do business in China. The tariffs arguably make Amazon even more valuable because it's a cheaper alternative to the more vulnerable brick and mortar chains. The only cell phone related winner right now is American Tower, which we just talked to. There'll be plenty of time to buy the cell related semis, okay? Let the downgrades happen first, and then I'll give you a list. I don't want to be premature. Second, companies with scale that are doing well and have no China exposure. Hey, how about Exhibit A, Yum Brands, the parent of KFC, Taco Bell, and Pizza Hut. Yum, which spun off its Chinese division years ago, reported a spectacular quarter today. Again, don't be a hero. No hurry. You can afford to be patient, but be ready to buy this one into weakness. By the same token, you should add Costco to your shopping list. It's not in China, and as we've seen from the last year, the previous tariffs had no real impact on their numbers. Oh, and don't shoot every retailer, please. RH, parent company of Restoration Hardware, it took the extraordinary step of saying the tariffs will have virtually no impact when its stock was down almost $10 from its high today. It rallied a couple bucks, but it's a baby in the bathwater. People are banging down Pinterest all day, only to see the social networking site explode higher on a fantastic earnings report after the bell. What else? Drug companies with good dividends are a decent place to go, even with nearly every Democrat running for president talking about the industry like it's public enemy number one. Merck had by far the best quarter. It's worth considering. Same with Novartis, which reported terrific numbers. It was up nicely today. Of course, as I mentioned at the top of the show, utilities work. We just had Nick Akins, the CEO of American Electric Power, on the show, and while he told us there was some real slowing in the industrial economy, it hasn't stopped this company from being able to deliver superior results. Both AT&T and Verizon this very morning, delivered strong numbers. They have juicy dividends. I like them. How about growth stocks that work in this environment? Well, think cybersecurity. You can reach for CyberArk, which protects the administrator accounts that are basically the keys to the digital kingdom. Do you know that Fortinet just reported a great quarter after the close? Or you can buy my favorite, Cisco, which has almost no Chinese exposure. Your CEO, Chuck Robbins, saw all this coming and moved aggressively to divorce his company from the People's Republic. Some brave souls may want to pick at the Cloud Kings, betting that they have such great growth no matter what, including recession, and thus deserve even higher price-earnings multiples. Strangely enough, you can also circle right back to financial technology because the large banks are always considered to be vulnerable in a slowdown. But money managers still need financial exposure, so they swap into fintech. MasterCard and Visa have zero credit risk, so they're magnets for money. By the way, MasterCard's got a tie-in with the Apple Card. What else? You can buy the defense contractors, knee-jerk trade. I know it works, though. L3 Harris just had a nice move up. Great quarter, but it's my favorite in the group. I still think it's cheap. Finally, I get some gold exposure if you don't have some already. I prefer Agnico Eagle Mines or Barrick Gold here. People will keep buying precious metals as insurance against economic chaos. It's the classic safe haven for your wealth, and that's true for the gold miners, including Agnico, which we just spoke to. We just spoke to the company. I like everything it had to say. Again, though, aside from the gold miners, no hurry, no hurry. I think the broader market could go lower. And if you're patient, you'll be able to pick up most of these names, maybe not the gold stocks, at a discount. For now, you just need to keep your head down. Maybe raise a little cash from your high flyers if you don't have enough already, and then get ready to do some buying, as we will get through even this after some painful adjustment. Let's go to Evan in New York, please. Evan.
Booyah. How we doing, Jim?
I am doing well. How about you, Evan?
Good. Had a quick question for you about McDonald's. As the founder of a trading group, it's been a real moneymaker for us. It's been in an long-term uptrend for as long as I could remember. Now, with analysts saying it's due for a pullback, what are your thoughts?
No, I don't think it is due for a pullback. It's the kind of stock I buy in this environment. Steve Easterbrook's doing a great job. You don't need a roaring economy for McDonald's to do well. I think it fits my profile. I would be a buyer. I had mentioned earlier, Yum. I should put in McDonald's, too. Let's go to Dane in Florida. Dane.
Booyah, Mr. Kramer.
Booyah,
this is Dane Manfredi from the great city and state of Gulf Breeze, Florida.
Well, there you go. I have not visited yet. Go ahead.
I first want to thank you, sir, for consistently providing us investors, especially our youth, the guidance and insight needed to diversify our portfolios.
Young people are buying stocks again, and they're watching the show, and I love it. What's up?
Yes, sir, you got it. My question to you is in regards to the recent Pfizer spinoff. As you are well aware, over the weekend, Pfizer announced that they will spin off its off-patent branded drugs business and combine it with generic drug maker Mylan.
Right.
Since obviously this will impact their financial reporting metrics, how would you advise us young and old investors with investing in Pfizer, sir?
No, I don't think Pfizer has earnings momentum that I like. I prefer to see you in Merck or Novartis. I think that they are a better place to be right now. Pfizer, that deal was not that great, frankly, and it also revealed that it didn't have a lot of earnings power away. Let's go to John in New Jersey, please. John.
Hey, Mr. Cramer. My name is John from Asbury Park, New Jersey.
Well, you know I love Asbury Park. What's up?
Hey, my stock is Kratos Defense, ticker number KTOS. They reported yesterday they beat on both upper and lower number. Their forward guidance was great, but yet the stock sold off, and I'm confused.
Well, you should be confused because this happened time and again to Kratos. Every time the bears have come in and they've trashed it. Now, I typically do not blame short sellers or anything. I'm just saying that Kratos, I recommended the stock at 8. It went up to 12, then went back to 9. That's the pattern. So you wait a little bit. Kratos is in the sweet spot. I like defense here. I like defense. I do like L3 Harris more. Dolan in Rhode Island. Dolan.
Hey, Jim, my name's Rick. My son is Dolan. We've been watching your show for a year, and he's got a question for you. Here he is.
Hi, Mr. Cramer. My question for you is about Wells Fargo, the stock. I was wondering if I should invest in it now, wait a little, or just invest in something else.
Kid's got horse sense. This is who's looking at the market these days. Everyone tells us you have to be in index funds. Listen to this young boy, how smart he is. He's got a great question. The answer is that those large banks right now, Wells Fargo, a tough one, doesn't have a CEO. So I'm going to have to tell Dolan in Rhode Island, who is 9 years old, that I'd rather see him in a different bank, but the banks aren't in favor right now. But what I do want to say is I hear it all the time now. There's a sea change going on. Young people, all ages, they want to be in stocks. They're not brainwashed into just being in S&P. They like index funds, but they also want individual stocks. Please stop fighting them. It's a good thing. All right, after the technicians go negative and the strategists shave their targets, you use the opportunity to do some buying of high-quality plays. I'm counseling, though, that there's no hurry. Much more Mad Money ahead. It's a company with the technology that helps improve the detection of breast cancer by up to 60%. Please don't miss my sit-down with one of my favorite companies, Hologic. Then it's David versus Goliath, as the private, can't-own stock company SeatGeek takes on Live Nation head-on. Can it come out victorious? I'm talking to the founder, and the fan could be the winner. All your calls, rapid fire, of course, in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.